Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, the 27th of April, 2026. The U.S.-Iran war is now in its ninth week with no signs of progress toward opening the Strait of Hormuz. Meanwhile, we have an action-packed week of economic data. In today's video, I'll break down everything that you need to know ahead of today's U.S. session and look ahead throughout the rest of the week. Let's get into it. So over the weekend, and in what's become quite a common trend here, we saw negative news on the U.S.-Iran peace negotiation front. President Trump canceled the diplomatic trip that was scheduled to go out to Pakistan. Nonetheless, in what's also a trend, we saw some positive news ahead of the U.S. Open. That's that Iran has made a counter proposal wherein it would, on its side, open the Strait of Hormuz if the U.S. removed its blockade. Of course, this isn't seen as particularly workable at this point, but the fact that the two sides are at least trying to find some common ground is keeping risk appetite supported as we head into the U.S. session. More importantly, though, we're heading into a massive week for economic data and earnings. We have 4 or 5 major central bank meetings, all of which are expected to leave interest rates unchanged, though some, such as the Bank of England, European Central Bank, maybe even the Bank of Japan, could tee up potential rate cuts as we move into the summer. Another thing I'll be keeping a very close eye on is earnings. We have the Magnificent 7 companies reporting, or at least 5 of them or so, across Wednesday and Thursday, and that could be a big determinant in how the stock market performs, something that's been very resilient. And if you're like me, you were surprised that the stock market has been so strong, but I think the clear reason why is earnings. Look at this chart of earnings by year. Here you can see traders are expecting the S&P 500 to earn about $325 this coming year, and then $350 the year after that, and that sort of supports the valuations that we've seen. If you put a 20 multiple on that, that would be closer to $7,500 for the S&P 500 on next year's earnings, and even higher yet as we move forward. So despite all of the turmoil that we're seeing on the geopolitical front, these massive U.S. companies continue to deliver on earnings, and the next hurdle will be across this week as we get into those major companies that have driven so much of the rally of late. Today's chart of the day, of course, is the S&P 500. You can see it's been on an absolute tear here over the last month, breaking out to fresh record highs. I will note, if we look at the 14-day RSI, it's putting in a potential lower high, even though price has put in a higher high. That creates a minor bearish divergence, essentially showing us that the momentum on the most recent move higher isn't as strong as it was previously. That said, a lot will depend again on these earnings. If they come out at expectations, or certainly above expectations, that could nonetheless overwhelm this technical signal and push the S&P 500 higher yet. Meanwhile, any pullbacks that we see could find support at the 7,000 level, which was previous resistance, now support. It's also a key psychological level to watch as we move through this week and beyond. That is today's video. Thank you for carving a couple minutes out of your day to watch. And if I can ask one quick favor before you go, just drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again. Best of luck with your trades today, and we'll chat again tomorrow.